Hey guys, this is Juan Jaramillo with Empower Homes Team Lead, and today we're going to be talking about the differences of cash to financing in the perspective of a real estate agent talking to your client. I think that's a key difference in this video. So we're going to be talking about a lot of generalities, and so there's always an exception to this rule. So these aren't hard rules; these are very general rules. But I think this is going to give you really good guidelines to when you're talking to a client that's looking to either buy cash or finance, so you can kind of explain to them the pros and cons of each one. So speed to lead or speed of closing, speed to lead, speed of closing. Then we're going to talk about the appraisal and approval. We're going to talk about negotiation and certainty, cost involved, because they both have closing costs, and return on investment. All right, so speed of closing. Cash, oftentimes you can close a lot quicker, right? Obviously, you don't have to go through the loan process. The only thing you're really waiting for is the general warranty. So as long as there's not a backlog on the on the general warranty of the title of the home, then you can close pretty quickly. I've done it. I've experienced it. Monday we got the contract. Friday we closed. It was insane. But definitely can be done. It depends on how busy the title office is or the title team is. The other caveat would be if if the buyer doesn't care for a general warranty deed, and let's say they trust whoever's selling them the home, and they're good with a um quick claim deed, then you can close in freak as fast as they can wire the money over to the attorneys. So I mean, it can be really quick. A lot of flexibility with cash. With financing, typically it takes 30 to 45 days. Now, I have experienced it where it can be in 21 days. I've heard of 15 days before, and I've even heard of as fast as 7 days, which is absolutely insane. I've never experienced 7 days, but keep this in mind, the stars kind of have to align in a perfect way where the stars align, the planets align, and then everything works absolutely perfectly for you to be even to do it within 15 or 21 days. So it's not likely. I would unless the lender tells you otherwise, I would set the expectation about 30 to 45 days for financing. Appraisal and approval. So cash doesn't require an appraisal, obviously. However, the buyer can choose to have one and just have that contingency is 100% up to your buyer. And financing, 9 out of 10 times, dude, you're getting an appraisal, right? Even if you have a 20% down payment, you're most likely still gonna get an appraisal. Sometimes the lender can write that off, sometimes, but it's not often. So I would set that expectation for an appraisal approval. Negotiation and certainty. Cash is stronger, leverage. The way I want you to think about this is in terms of certainty. The sellers want to know how certain is it that we're going to get to the closing table for whatever offer that they accept. So the less variables involved or the less things that can go wrong, the more certainty they have. With cash, there are fewer things that can go wrong than with financing, right? So with financing, it's still competitive, but it's contingent on lender approval, on the appraisal. Most traditional loans will ask for a CL 100 contingency. So just there alone, you have 3 or 4 contingencies that the financing lender requires versus cash. It's more of a preference for the buyer. Cost involved. So costs, obviously, closing costs for cash is a lot lower. All you have to pay for is the attorney fees. And then financing, you have to pay for the lender fees, which is usually the more expensive side of things. You got lender fees, loan origination, interest. And so that's something to keep in mind. Usually for cash, these are hard numbers. You're looking at 12 to 1500, and that's including title, insurance, and all that stuff. So I'm sure you can get it for a lot less than that. And then financing, you're looking at rule of thumb is 2.5 to 3.5% of the purchase price. That is a pretty big difference in closing costs. So keep that in mind when doing your numbers. Return on investment. So cash, no monthly mortgage. So I mean, you're just straight cash flow for the most part. Obviously, there's maintenance and whatnot, but for the most part, straight cash flow if you're looking for a rental and immediate equity. Financing leverage allows you to keep more cash liquid, which is good, and but you have to pay interest for it, right? So what I've noticed in general, this isn't true to it for every deal, but in general, if you have a loan on something, your return tends to be higher. However, there's also a higher risk for that higher potential return. For cash, it's pretty black and white. I mean, the numbers are there. it's a lot more black and white, a lot safer if you may, because leverage can be a double-edged sword, so you have to be careful with it. A lot safer, so a lot less better returns, but maybe more steady, maybe. So just a way to think about it. And I guess this is the end of the video, guys. I appreciate your time. Thanks for watching all the way to the end. I hope you guys got some value, some little nuggets of golden nuggets, how I like to say it, of information. And if you guys are looking for a video on buyer agency or explaining the buyer agency contract or agreement, we have a video on that in the channel. If you happen to be in the Greenville area and you're looking for a team to have some support or looking for a brokerage that can bring some support, feel free to reach me. I'd love to talk to you. Have a good day.